Welcome, everyone, and thank you for joining us today for the 14th Annual State of the Treasury Profession webinar. Each year, Treasury Strategies performs a survey asking treasurers like you what is at the top of your checklist when looking at the calendar for the year to come. Today, we'll share those results with you. Our presenters include Jeff Diorio and Paul LaRock, directors and co-heads of Treasury Strategies. A few housekeeping items before we get started. This session is going to be about 30 minutes long. We encourage you to ask questions using the Q&A window at the bottom of your screen, and we will respond via email after the session. And this webinar is also being recorded. You will receive a recording link as well as a copy of the presentation following the session. With that, I will turn it over to Jeff and Paul. Jeff?
Thank you, Katie. Welcome, everybody. Paul and I are very excited to be doing the 14th annual, and I can't believe next year will be the 15th annual. We had to put a plug in here for perfect vision because it is 2020. So today we're going to talk about some of the current market forces, the results of a survey we've done, which we do every year, and the interviews. As a preamble, I can tell you this is probably one of the most enjoyable things we do every year. We get to interview a lot of people and talk to them about what they think is going on. And the give and take is really quite wonderful. I do think, other than some recent events, which we will talk about, on the whole, treasurers were pretty optimistic about what's going on and what their opportunities are this year. And it seems like there's a lot of projects that have been sitting on the shelf for quite a while. So having said that, let's get right into it. We'll start with some forces that are impacting Treasury and Finance. And Paul, you've been doing quite a bit of speaking on this topic recently.
Yeah, so the survey and the interviews we did from November through mid-January of last year and into the early part of this year happened within the context of an economic and political environment. And so the upcoming election in the United States, the trade wars were mentioned numerous times as things influencing how treasurers thought about the world around them. And more recently, and not covered in those early interviews, is the outbreak of COVID-19 and to what extent that is disrupting supply chains originating in Asia, as well as it's spread across Europe and now into the United States. And our view is in the United States, there isn't enough test data to make any predictions. It's kind of a wait and see, and that level of uncertainty will diminish in the weeks ahead. Nevertheless, we encourage you to hope for the best, prepare for the worst, and we'll talk about that in the final minutes of our webinar. The other thing is concerns around interest rates and liquidity, and so the Fed cut short-term rates by 50 basis points yesterday. Good news if you're a borrower, not so good news if you're a net investor. Treasurers, as well as others in the financial services sector, enjoy an economy that's moving along at around 2%, GDP growth, and is near full employment. And the full employment part makes it challenging to hire and retain talented employees. And there is an ongoing concern about the potential for an upcoming recession. Our view on that is people are reacting to the unusually long length of this economic recovery, which is stretching more than 10 years. Most of us have not lived through more than a decade of prosperity without having at least a short-term recession disrupt that, and we've been pretty lucky that way. And I think a lot of people are just having a "is this too good to be true" kind of moment. We don't see anything very specific on in the economy that would trigger that, unless we have a huge viral outbreak. They're also, Jeff, we're talking a lot about new technologies, an area in which you have a strong area of expertise.
Yeah, we're seeing, and this goes back to my comment about treasurers being able to work on projects that they've been wanting for a while. Well, there's a lot of really exciting new technologies out there, both for adding efficiency and control, and we're seeing organizations having the wherewithal to work on them now. We still see the corporate actions having a pretty significant impact, right, Paul?
Yeah, so for companies that are either merging with other companies or divesting, treasurers get affected in terms of their lines of credit, their banking structures, consolidation of banking structures from acquired companies, consolidation of credit facilities, and changes in those credit facilities are associated with that. There's the redocumentation of accounts that's necessary, changing signers and users on various banking systems. So for companies that are going through that's front of mind for those treasurers. Treasurers also mentioned the ongoing concern about cyber fraud, fraud attempts, various bad actors, emails that come to you that look real. When you click on them, suddenly you download a virus. That is a constant concern. I think the way treasurers approach that might be changing a little bit, and we'll talk about that a little bit later in our webinar. And then
finally,
LIBOR replacement. Yeah.
Yeah, it was on the list last year. It's on the list this year again, and it's coming. What is it, 2021?
2021, and so we advise treasurers to start documenting the credit facilities and financial instruments in which LIBOR indexing is mentioned in the body of those documents, and that's on the list of things that you have to address in 2021 when they convert away from the LIBOR replacement.
Very good. So we conduct a survey, an online survey every year. It goes out to about 600 treasurers and treasury professionals. So the universe of people that respond are at several levels. And really there's two main questions with 30 some odd to 40 answers. And these are the top 5. So first question was, what are your priorities for 2020? And we see the survey results tying in very closely with the interviews that we've performed. As you can see, cash forecasting remains at the top of the list. And we see a lot of organizations focusing on working capital and that sort of thing, and where's the money and what are we going to do with it? And it makes sense that forecasting remains at the top. Paul, what do you notice in this list?
Well, it's a big move for both best practices and operational efficiency, and I think those are connected to the same thought that treasurers are reaching out to operational units, or the operational units, business units are reaching out to them, and they're looking for greater efficiency in financial transaction processing, both incoming and outgoing transactions. They want to see tighter integration with accounting systems, enhanced efficiency, improved controls. And so the request for best practices in the details of our interviews, which is a parallel set of data gathering that we do, would reinforce that.
Yes. And another point to be made here, the difference in votes between the first 5, the top 5, are not very dramatic. So these are all very, very high-level agenda items. We felt the top 10 were worth mentioning, so the next grouping of 5 items were the Treasury Functional Organization, focus on staffing levels and skill levels, which was important last year and continues to be important, payments, and cross-department initiatives with Treasury as a partner, which you'll see in the interview shortly.
I also think it's interesting that working capital management in the previous slide reflected a movement from a top to a 4th ranking. That's a little bit out of sync with the interviews that we did in parallel. So we do the survey of hundreds of people that respond to that. And then an overlapping group of treasurers, we actually spent several months calling them and talking to them. So working capital came up more frequently in the interviews than would be reflected by the survey data that we're looking at here. Then we also asked about benchmarking, and this reflects what the respondents said was their top concern or top interest in terms of benchmarking.
With their peers.
With their peers, yeah. And so bank and merchant card service fees is a top-ranked area, with a particular emphasis on merchant card fees in industries that have not traditionally accepted cards for decades in the past. So this is not coming from the restaurant, retail, and hospitality industry. This is coming from healthcare, higher education, industrial good distribution companies who have been accepting cards for many years but are now seeing the volume of activity in that payment vehicle and those channels increasing. I would credit the aggressive deployment of purchasing cards for driving that volume.
And then we see cybersecurity and fraud prevention jump up. And this is as a benchmark item. So while we know everybody's been focused on it for years and years, the concept of reaching out to your peers and understanding what they're doing is more prevalent. And we see that as a positive, right, Paul?
Yeah, and I think what was going on in 18 and 19 is treasurers and finance professionals recognized that fraud prevention, cybersecurity were very important. We didn't hear people reaching out too much in terms of trying to get benchmarking data on that. And now people are reaching out, and that's the change in 2020. So it doesn't mean it's not a reflection of a higher or lower priority, but just a change in approach to cyber, particularly around the cybersecurity part, trying to understand what other companies in similar industries or similar risk profiles are doing and comparing yourself to them.
Yep. And then to round out the top 10, you can see folks who are also focused on new technologies, operational efficiencies, the functional organization, and working capital management, which also came out in the interviews.
Yeah.
Very good. So moving on to the interviews, we asked 3 questions of treasurers. We asked them what they thought opportunities were in 2020, what they felt risks were that were top of mind for Treasury and Finance, and what was on their to-do list. So when we look at the opportunities, there were a lot of different responses, especially based on different industry categories, like the insurance industry. We're focused on certain things versus others. And these are the top 5. And we've grouped things into them, but the very first is working capital improvements.
Yeah, and so in the interviews, treasurers talked about not just the traditional 3 working capital metrics of inventory, payables, and receivables, but also around the underlying transaction processing costs, the internal and external costs of billing all the way through the transaction cycle of applying it to either our receivables or payables ledger. We define that as optimization of cash conversion, or cash conversion cycle optimization. So although they were using the word working capital, they're approaching it with a broader net than pure working capital metrics. They're also looking at the process itself. And so that is a little bit of a change from what we've seen in the past, where working capital has always been a relatively high priority.
And then there's the new technologies that people are leveraging, because there are some new capabilities. One of them is artificial intelligence. And I kind of chuckle when I hear how people are using that. It reminds me of the old joke about military intelligence. But it does bring some new capabilities to analyzing your data used properly. Used improperly, it could be a colossal waste of time. Then we get to new technologies. So that leads me right into new technologies and optimizing existing technologies. So a lot of organizations have finally taken projects off the shelf, or they've reached sort of their end of life for the products that they were using, and they're now looking to select new products. We're seeing a lot of treasury management system selection projects being kicked off. We're also seeing a lot of organizations looking to do a significant tune-up on the technologies they have, because many people have moved to the SaaS environment, and new functionality are added to those solutions on a regular basis, but you may not have reconfigured or optimized your system to take advantage of those new capabilities. So part of the new SaaS cloud world is that you don't necessarily need to switch kit. You can literally optimize what you have. And then there's a lot of other exciting new things that everybody's talking about: APIs, robotics processing, artificial intelligence, dashboarding. I like the dashboarding because it's very mature and some of the tools are quite easy to use. Some of these others come with a bit of it's a dual-edged sword. You've got APIs and RPA. RPA is a wonderful tool for getting more efficiency. At the same time, you now have in-house development that you have to worry about maintaining. And the APIs, while being wonderful, all the banks are deploying them, but they're wonderful for getting more information and conveying more information, but it feels like we're moving back into a world where each interface with each bank is going to be different, and that requires more effort on your behalf to maintain those. Versus a couple of years ago when a lot of people were looking at Swift and saying this is wonderful because it's a single format, it's a single interface, and it makes life easier for us. So they're wonderful, they're maturing, and hopefully they're very, very valuable to you. Then we get to changes in payments, and I think this is an exciting area that's matured quite a bit, Paul.
Yeah, and so in our interviews, treasurers all discussed researching and considering real-time payments, non-bank payments. Where we see the implementation work actually being done, moving from conversations and research to actual implementation, is in the insurance industry with real-time payments, specifically on claim payments. They want to be able to move claim payments faster. It's also where we see implementation of Zelle being done. PayPal is ubiquitous in small business. There's nothing new there. We have seen some of our non-for-profit clients have certain specialized uses for some of those payment vehicles. But the real implementation work we see around real-time payments is being done in the insurance sector. We can look in the other sectors and we can see payroll departments having greater interest with same-day ACH. To do adjustments and changes in payroll on a Friday afternoon, rather than have somebody wait to the following week to send them money. But that's not new in 2020. That was more of a 2019 thing. And then an overall interest in what, if anything, they can do with incoming and outgoing payments. What we don't see this year in the survey is a high degree of interest in certain types of Bitcoin, digital type currencies. That was more of a research topic for corporates in 18 and 19. That conversation seems to have really quieted down. We also, in our interviews, had treasurers discussing how they are initiating projects or with their business units, moving closer to the customer or closer to their suppliers, and offering Treasury support on special projects in that area. One thing that they can do with their partners is to enhance forecasting reliability, and so that's a best practice aligned with forecasting. And so if you have a forecasting initiative, it's very likely that you want to get the best, most timely information regarding customer and vendor behavior. So that would make perfect sense that they're aligning that way.
Yeah, we're definitely seeing the remit of the treasurer expand. The payment fraud and that sort of thing is helping with the expansion. Somebody has to oversee it, and the treasurer is one of the most obvious ones. And then we've got, well, we've already mentioned this, the low interest rate environment, which is lower than it was a day ago,
that's
and
right.
access to capital, which is a benefit. But on the next slide, we'll also see, of course, that it's a detriment. And I had a chat with somebody earlier this week, and they were saying that there's, treasurers are sitting on a lot of money. The cash, in the bank is at record levels, and the investment opportunities are somewhat thin.
Mm-hmm.
So once again, at the very top of the list, and I don't think it's a surprise, is treasurers' focus on payment fraud, particularly some of the new type cyber attacks and that sort of thing.
Yeah.
And, yeah.
One of the things that's new this year is around bank entitlements and bank account rationalization. And this is coming out of the interviews with those who are going through mergers where they're bringing in vast account networks. A few of our clients are relatively large companies that have executed mergers, and they're global clients. And so identifying who all the current signers are, changing signers on account, most importantly, changing users and access to bank systems that can do funds transfers, and then documenting all that for FBAR reporting, et cetera. Those are big projects. They're not really complicated or hard. They're just very, very time consuming. There's an overall embrace of technology to support the enhancement of entitlements and tracking of bank accounts. And I think we can talk a little bit about that around team management and optimization.
Right. So I think the team management and all of these areas came up in the interviews. Team management and optimization was interesting, and it ties in with the Treasury Department becoming more strategic within the organization, and treasurers focus on how to get their team to evolve up from a more operational focus to becoming more strategic, and as you point out, technology is a big part of that. Then we asked treasurers what was on their 2020 to-do list, and
And so we can add that these will reflect their perception of risks and opportunities, and after thinking about the risks and opportunities, they then develop their things to do lists or objectives. And so you will see us repeating some of the topics we mentioned before, which is logical given that people react to risks and opportunities.
Yep. Very much so. So you can see that on the banking relationship, on the banking services and the card optimization, there's quite a bit of focus, and we're a little surprised that there's so much focus on making sure that the entitlements are tightly tracked and that sort of thing, because it's something that's always gone on, but it does seem to have jumped up a level recently. Yeah,
and that's kind of puzzling for me too, because mergers and acquisitions are not new. That's been going on forever. Yet there are a surprisingly large number of treasurers that have formal initiatives to get this all buttoned up and to hit. Maybe it's about the overall effort to get cash visibility. Once you get cash visibility, you need to get visibility into the details and operations of the bank accounts. That all kind of fits together in a general theme of visibility, followed by enhanced controls in sprawling bank account networks.
Yep. Then when we look at some of the technologies they're looking at, I've mentioned that treasury management systems were pretty high. I think there's finally the capital expenditure and resource availability to work on these projects, and so we're seeing a lot of treasurers focused on that. And the focus here really is efficiency and control. So can I get much better data, much better analysis, and a much leaner process for processing payments and tracking all the things I need to track, and can I have enhanced controls by having something that perhaps is analyzing all of the payments that are leaving the organization to make sure that there's no anomalous transactions. And that ties in very closely with the focus on fraud mitigation and risk.
We also have an emphasis that we're adding around business continuance plans or business recovery plans. And I think with that in mind, when we think about the entire risk, your risk framework in managing risks, one of the things that we encourage you to do is to look at your disaster recovery or your business continuance plans, rehearse them at least once a year, and then add something special to them or new to them, which ties in with the headlines that are in all the newspapers on all the websites.
Right, and before we move on to that, we do feel that risk is going to be a pretty significant focus for 2020 for all the organizations. It came up in different ways with each. Some are looking at their payment workflows. Some are looking at entitlements, as we mentioned before. Some are looking at updating their risk policies. And then, of course, we were 2/3 to 3/4 of the way through the interviews when all of a sudden the coronavirus came into effect.
Yeah. So let's talk about business continuing planning. I've been in this business for more than 30 years, and disaster recovery plans or business continuation plans have always been an important element of good best practices in Treasury. We've always encouraged companies to practice those plans and test them at least once a year. So the plans have always included, fire in your building, you can't get in. They've reflected the regional location of the Treasury staff. On the West Coast, there are plans that incorporate earthquake preparedness. On the East Coast, around hurricanes. Those of us in the northern United States, we deal with the snowstorms that prevent us from getting to work in the morning. Outside of healthcare, I've never seen a plan that deals with a pandemic or a virus. And so we've developed our own plan for this company. Last Monday, we put it into place. And so I'll volunteer to you some of our thoughts on that. There are no recognized best practices in this area. Everyone is doing this on the fly outside of healthcare. Hospitals have been doing this forever. But your average manufacturing company, distribution company, they have not had these in place. So the first thing, like all disaster recovery plans, you should have a contact list. All of your staff, the people you interact with at banks, financial institutions, should have that on your phone and always have that ready. A big part of dealing with any uncertainty is reaching out to those around you and thinking about problems together. The second element of a viral BCP that needs to be incorporated into your thinking is travel. So we have seen actually several clients have sent us their plans that they have just put in place in the last 4 or 5 days, and they think a lot about airplanes. And so you've got, like, I think, 3 general approaches that you could execute with air travel. One is you could perceive that there's an inherent risk in getting through an airport terminal and onto an aircraft, and if a virus is widely circulating, you may want to either tell your staff not to do that or respect their judgment on making decisions around that. The second is an approach of distinguishing between the risk of international and domestic travel. And then the third is not getting on the planes and just being brave, which we would question whether you would do that. The next is the important element of working remotely. And this has to do, I think, mostly with commuting. So as we think about our offices around the world, we know that our employees come to our offices using multiple transportation modes. Many of them get in crowded trains and commute in because most of our offices are in downtown areas of big cities. Others use cars, others ride their bicycles or walk. Each of those is a different risk profile. And so a decision that you have to make is, when is it safe to commute, when is it not, and who makes the decision? Our consultants do a lot of important work where their professional judgment is utilized on our clients' contracts. We trust their judgment on assessing the risk of how they want to get to work or if they want to work from home. So we are permitting our employees to make those decisions, and we respect that.
Yeah, and then with respect to Treasury and Treasury operations, Paul, I think you've got some points here as to what they need to do to address the risks.
And I'll tell you what the saving grace is the widespread deployment of cloud-based systems. When everybody had installed systems and you only had access from an office, that would be much harder to implement a business continuation program in this environment. But so many of our clients use cloud-based systems, and that they already routinely have people work from home and can do cash positioning and things like that. So that makes it much easier. You have to coordinate with your IT department to make sure that there is support for people working remotely or in the office. And then the importance of being prepared for short-term notice. So our protocol right now is everybody goes home from the office prepared to work from home the following morning. We assume that it's never going to happen conveniently. If this plays out in a bad way, in the morning, they'll realize that it's unsafe to travel and they need to work from home. We still need to serve our customers. The business goes forward. We enjoy the luxury of being in the consulting industry. We can work remotely. This is true of many industries, but not all industries. So if you're running factories, that's a bigger problem, but this isn't a plan for that. This is for Treasury. And then there is the possibility that somebody could become ill. And so we're enhancing the staff backup on all of our projects. So in addition to vacation or the normal flu that people acquire, if several people get sick at once, there'll be a greater likelihood that we can back up the project work and move forward with other staff that are in the office. So those are our thoughts. We hope that they're helpful to you. Each of you needs to think through. I wouldn't do this alone. I would bring teams of people together and think this through and kind of almost like war game it to think through how you will do this if it happens suddenly. And I think if it happens at all, it will happen suddenly.
And on a more strategic level, Paul, for treasurers, it's uncertain what the impact will be.
Right.
We do know some industries are affected. The airlines are seeing much less travel, and that's impacting them. Certainly, conventions are being restricted.
Yeah.
But for the main industries, the impact from a Treasury and Finance point of view shouldn't be too dramatic.
No. It's a hope for the best, prepare for the worst kind of conservative approach. It's the 21st century. In the 20th century, we know how fast viruses moved. They moved about 60 miles an hour, was the speed of a fast train. They crossed oceans at the speed of a steamship or a diesel-powered ship. That was the story behind the 1919 flu epidemic. We know how fast they move now. They move a little over 600 miles an hour, right? And so that's how fast the planes move.
Yeah.
So this is not something that's going to be unique. From time to time, this will happen. It's part of 21st century life, so get ready for it. it. Hopefully this doesn't turn out to be a bad thing, and, sometimes the worst happens for the best. We'll be all prepared for a future event then.
Right. And if we weren't going to talk about this, because originally this wasn't even on the agenda, we were talking about a lot of the preparedness for cyber and protections against that, and we've got some ideas on that as well around doing tabletop exercises and that sort of thing, so we'll be talking about that some more later. We want to thank you for joining us today. We hope you found this valuable. We will be providing recording of it on our website, and we will be distributing this presentation deck to everybody. We'll also be aware that we'll be speaking at a majority of the industry conferences around the country, so you can see us talking on various topics there. If you have any questions, please submit them in writing. We'll respond in writing because we don't really have time in the scope of this format to respond to them. And finally, look for a write-up of these findings that will be made available to everybody. Thank you for joining us.
Have a good year, everyone.